please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon.
Okay, all right. Welcome to Halftime Report. I'm Nigel D'Souza, and as you heard earlier, that was Reema Tendulkar. Well, as we speak, the markets are trading mildly in the red. You have the Nifty that's down close to around 10 points. The mid-cap index is seeing some profit booking. The crisscross line should come up for you. More number of stocks are declining in comparison to the number of stocks that are advancing. So just keep that on your screen as well. Let's get the advanced decline ratio. We started off well in the green, and that explains why we had more number of stocks that were advancing in comparison to the declines. Also keep your eye out on the 10,400 put-out mark. That's rather important. That's seeing quite a lot of built-up today. I don't think we're getting those rates right. We'll pull that up in just a bit. By the way, keep an eye out. In the next 1 hour out, we'll be getting PNB's numbers. That's going to be very, very important. And the other numbers that we're looking at is Mahindra and Mahindra. Well, all sorts of numbers we're hearing on the street, but we'll wait for the official set of numbers that will...
Right away, talk about the stocks that are moving and shaking in trade. And on the downside, it's the Adani Group stocks which are getting hit quite hard. So Adani Power down 9%, while Adani Ports, which is in the Nifty, that's seeing a cut of close to about 6.5%. Anisha, disappointing numbers?
Well, Reema, actually, I think I got it wrong because the numbers didn't look very disappointing, because if you strip off the one-time adjustments, the numbers are in line or just a tad bit below estimates. My guess is just if you pull up the last 10 or 15-day chart, the stock had moved higher ahead of the numbers, and maybe we're seeing a tad bit of profit booking. But to tell you what brokerages make of it, Macquarie says that the core operating performance was in line with expectations. They like the fact that the cargo volume was supported by crude as well as higher coal. Though they believe that the container volume might taper off in the coming quarters and months, they say it will be difficult for Mundra Port to gain the 80-90% of incremental volumes, the pace that we had seen earlier, and that's why they maintain a neutral chord. They had just marginally cut their target price to 385 versus 388 earlier. CLSA also liked the fact in the numbers that they had expanded their market leadership. They believe that it can deliver a 16% growth when it comes to the port EBITDA in the coming 2 to 3 years, and they also like the fact that the bulk volumes really rebounded in the quarter. So they were all positive when it comes to the results. Morgan Stanley also calls the result in line, though they were disappointed with the Dhamra volumes as well as the volumes that we saw in the logistics business. Deutsche Bank maintains the hold rating, but they expect a 12% EPS CAGR growth over the next 2-3 years. Phillip Capital as well, the cargo has grown along expectations is what they say, and they believe that the current price is an opportunity to own a cash generating asset portfolio. So let's see whether the street believes that or not, but as of now, the stock is down about 6-7%.
That's right, Anisha. But tell us about Adani Power as well. All right, I think... Anisha?
Yeah, sorry, Nigel. Yes, I was talking about Adani Power as well in terms of the other results. The losses have expanded to around 800 odd crores, an expansion of 400 crores year on year if you look at that. PLF dipped down to 38% versus over 60% that was reported last year. So there was a clear disappointment when it comes to the PLF level. The management commentary was not very optimistic. They always say that they are hopeful of a resolution when it comes to Mundra, but no specific comments coming out there. Though they believe that the coal availability should improve at Tiroda and Kawai, which was the biggest disappointment this quarter. Other than that, as you were talking about Adani Green, that one is down 5% given it has been added to the ASM list, and Adani Enterprises and Transmission reports numbers today. So they are also in focus. So all of these 5-6 Adani companies in focus today. Back to you.
Okay, absolutely. Thank you so much for that. Let's move on to Ujjivan. That's down close to about 3% odd. Abhishek, there you were disappointed that the customer addition was negative for Ujjivan compared to its peers.
Well, it's a weak start for Ujjivan for FY19. You look at the last 3 quarters, customer growth for Bharat Financial has been upward of 4.5% quarter on quarter. So the chart should come up for you, wherein the growth over the last 3 quarters for Bharat Financial has been pretty strong in terms of customer addition, while for that of Ujjivan has been pretty much on the lower side, and it has been declining over the last 3 quarters, and that has not gone down well. You look at the disbursement growth, despite the fact that the last year Q1 FY18, the disbursement had declined 9.5%. The disbursement growth has come in at just 23% on a YOY basis, and that has also not gone down well. However, the AUM growth at 21% remains on the higher side over the last 4 to 5 quarters. Asset quality has largely remained stable, has improved due to write-offs, and balance sheet has been strengthened due to the fact that provision coverage ratio has improved. The portfolio at risk, or the defaulting portfolio, has come down by 16% on a sequential basis. It now forms about 3.3% of the book as against 4% earlier. However, the NII and the PAT were way below our poll, and that is why we can see a tank in trade today of Ujjivan.
Okay, all right. Thanks so much for that, Abhishek. Well, Hindalco, that's the stock we're focusing on. Remember, just a few weeks ago, we had that big acquisition that Hindalco did. That's of hilarious. Now, at the press conference itself, and, when Mr. Birla spoke to us, he said that they're guiding for around $360 million in terms of an EBITDA number in the next couple of years. The Q2 numbers, that's of this calendar year, justifies that. It makes you believe that yes, the $360 million is very much on the cards. Aleris, they reported their Q2 numbers just overnight, and the numbers look good. Top line growth of nearly around 19% on a year-on-year basis. Volumes were good all round. APAC on a lower base did grow quite well, but North America, that's from where bulk of this operational performance comes, and that looked very, very good. The adjusted EBITDA came in at around $85 million. Now, that's very, very good. If you're taking a look at 360, your asking rate per quarter is around $90 million. So $85 million is very, very good. Most of the street at best was expecting around $80 million. EBITDA per ton as well looked fantastic, $360 per ton. That's a growth of around 19.5%. And particularly the North America business, the EBITDA number jumped up. Strong demand coming in there. That's what helped them. And also commercial production coming in from North America. That's what helped the business. They reported a loss, yes, but that was because of a one-time. Adjusted for that, it would have been a net profit. And more importantly, Q2 looked good. The management is saying that Q3 will be even better. So you're looking at this run rate of around $85 million. They're saying that, the automotive sheets, so there the sales will pick up. So that what will help them. The fixed cost will obviously come low if the volumes do spike up. And maybe you get more demand coming in from Europe as well. That was a bit of a drag. The street giving it a thumbs up. Stock holding in the green when the market's trading in the red.
Okay, thank you very much for that. But lots of other stocks should be on your radar, and Sonal is here to compile that list for you. Sonal?
Thanks a lot for that, Reema. And a lot of stocks on my radar today. I'll start with Avanti Feeds. Once a multi-bagger is declining in trade today, down around 10%, and that is led by the weak earnings that the company posted. And the weakness was seen in the shrimp feed business that contributes around 88% of the company's revenues. The margins there halved on a YOY basis and are very flat on a sequential basis. So the margins, they contracted by 980 basis points overall. That was led by higher material costs. Even the profits declined by around 40%, and street definitely is not liking that. Jain Irrigation is also high in trade today because there are reports that one of the arms of the company, that is Jain Farm Fresh Foods Limited, is coming up with an IPO, and it is valued at around 6,700 crores. And Jain Irrigation currently holds around 81.76% in this particular arm of the company. The current market cap of the company is around 4,200 crores, and Jain Irrigation shares in this particular arm will be valued around 5,470 crores if this is the actual valuation. However, we have not independently verified these reports. Dalmia Bharat Sugar is another stock that is reacting to its earnings. Well, the sugar segment was expected to be weak. However, there's strong growth seen in the distillery and the power segments. Also, sequentially, the company has reported a profit versus a loss, and that is what the street is liking. DFM Foods also is surging on the back of good set of numbers. Operating profit margins have expanded by around 410 basis points, and that's why the stock is up in trade today. Back to you.
Okay, all right. Thanks so much for that, Sonal. Well, Wockhardt as well is buzzing in trade. Remember, the company reported an improvement in the operational performance, though it was on a low base. The overall earnings, however, looked pretty weak. We spoke to Mr. Habil Kurakiwala, the founder and chairman of the company. He gave us the outlook of the company going ahead. Let's hear out what he told us earlier today.
We are having a comprehensive cost management measure. We also have taken the use of Accenture to do this, and all these where we have brought down our operating cost. And you once saw a positive EBITDA this quarter, and I believe that it will be not only sustainable, but it will improve in the quarters to come.
The decline that we've seen in milk prices has straight away gone ahead and boosted the company's margins. We spoke to Devendra Shah, the chairman of Parag Milk, earlier today. Let's hear him out.
We are giving the guidance for the 20% for the throughout year journey, and even this current quarter is good because it's coming the Shravan mark. All Govardhan ghee and other products sales are very good.
We also spoke to Atul Lal of Dixon Technologies earlier today, who expects the consumer electronics growth of around 20 to 25%, but flat revenue growth from the mobile as well as the reverse logistics. That space in FY19. Let's listen in to what he had to tell us.
We are in the process of implementing a backward integration project of PCB assembly, and that project implementation will be completed by September. Now, we feel that that's going to lead to a significant margin expansion. In lighting, the revenue growth is going to be around 10 to 12%. In washing machine and in consumer electronics division, it's going to be higher than that. It's going to be around 25 to 30%. In mobile, I feel it's going to be flat. And in reverse logistics also is going to be flat.
Okay, let's move on. Arvind has posted a weak Q1, but the management guidance remains quite optimistic. They are guiding for a 20 to 24% growth in their branded retail segment. We spoke to Kulin Lalbhai, the executive director of Arvind, earlier today. Listen in.
We have done exceptionally well in the brands and retail business this quarter. In fact, the 18% adjusted number is an industry-leading growth rate. And one has to take into consideration, last year it was a pre-GST quarter wherein the entire industry had preponed the end of season sale. So in a sense, the base for the quarter is one which is heightened due to the sale impact. So an 18% number which we have delivered is an extremely strong number.
All right, here's a quick recap of all the top buzzing stocks we just covered. We have Adani Ports, Adani Power, Ujjivan, Hindalco, Wockhardt, Parag Milk, Arvind, Avanti Feeds. You have Jain Irrigation, Dalmia Bharat Sugar, DFM Foods, as well as Dixon Technologies. A lot of trade, we are talking about the market slipping from the high point of the day. Now it's seen a good recovery from the day's low, actually. Tata Steel has seen a bit of a jump in the last few minutes. Eicher Motors as well has jumped up. And even India Bulls Housing Finance, a bit of an up move is what we're seeing on all these counters. And that explains why the Nifty is off the low point of the day. In fact, we have moved into the green as well as we speak. From the broader markets, HOEC, that's the stock we're looking at. Volumes have spiked up big time out there. And in fact, the stock has moved to a 52-week high. Big, very, very huge volumes, particularly in the last 1 hour or so. But a lot of numbers coming in. And in fact, yesterday, Vinati Organics, that stock was the start, was up close to around 20% on strong earnings. The revenues were up nearly around 25%. The EBITDA rose by around 40%. To understand what's going on and what's the outlook going ahead, we're joined by Vinati Saraf Muthreja, the executive director of the company, who joins us to discuss the outlook. Hi, Vinati. Thanks so much for joining in. Congratulations on a very, very strong set of numbers. The street liked it pretty much. Wanted to focus on the first part of your business, the ATBS business. Now, one of your competitors, I think Lubrizol, you had told us in the past that they had shut down. So how much of these numbers were because of that shutdown? And what was the growth in the ATBS business? And what's your market share now? It was at around 40%. It would have moved up, right?
Yeah, absolutely. So till last year when Lubrizol was still operating, we had about 45% market share. Today we have about 65% market share. So means for us, our ATBS sales have increased by more than 50%. Also because of Lubrizol exiting the market, we are running at full capacity. The demand for ATBS has also shot up because of oil prices going up, since ATBS based polymers are used in oil exploration. Now all that has resulted in us able to renegotiate our contracts, which has essentially increased the margins for ATBS ATBS also. Hence, you will see the increase in revenue as well as increase in profitability coming from ATBS, and this is expected to stay as is, to be sustained, because there's no new competitor for ATBS coming in. In fact, we will be increasing our capacity by another 15% starting October.
Okay, so that's about ATBS. I'll come back to more about, IBB, IB, as well as more on ATBS. These three key products contribute nearly 88 to 90% of your overall revenues. I want to get your thoughts in on PAP, or para-aminophenol, where you have announced a capital expansion in Maharashtra. And given that is an input used to manufacture paracetamol, which is the most widely used pain reliever, if you could walk us through the kind of estimates, growth estimates we should expect from PAP?
Sure, absolutely. PAP will be an investment for us of nearly 600 crores, resulting in revenues of more than 600 crores, because we will be making PAP and aniline both with it. Currently, PAP is manufactured mostly in China, and they start with a different raw material. They start with PNCB. We will be starting from nitrobenzene. So ours is a greener, cleaner process, one-step process. China is facing some pollution issues for their current process, and hence existing importers of PAP in India are very keen that we develop this process as soon as we can. Now, our current status on it is that we have built a prototype pilot plant for it. We made a 20 crore investment for the plant. Now, we ran trials. Now, there have been some teething troubles which we are rectifying. So, we expect the trials to go on for another 3 to 6 months, and then we will take the final decision whether to go ahead with the commercialization or no for the product.
All right, Vinati, I wanted to focus on IBB actually. I was doing a quick check, and ibuprofen prices are up both domestically as well as internationally by 10 to around 30%. Now, IBB is used for manufacture of ibuprofen. So, if you could give us a sense, what's the demand currently for IBB? And we understand that the ibuprofen prices went up because BASF shut down. Has there been some impact on demand for you, particularly in IBB? And also, how are the prices? I mean, if you could give us a sense of realizations in IBB.
Sure. See, IBB prices haven't changed much over the last few months, and you're right, because BASF's plant is temporarily shut down. There's a shortage of ibuprofen, and that is why the ibuprofen prices have gone up for the short period till BASF starts production again. Now, for us, in fact, in Q1, IBB offtake was similar to FY18. Q2, the IBB offtake will be slightly lower because of BASF's shutdown, which we expect to make up in Q3 and Q4.
Okay, so what is your current market share in these three key products now? Has it gone up, and where does it stand?
So ATBS, our market share is 65%. IBB, it remains the same at 70%. Isobutylene, domestically speaking, because it's a gas, we don't export it. We have about 80% market share, and these three products combined contribute to about 80% of our revenues.
Okay, Vinati, just to keep it simple for our viewers, give us some kind of guidance going ahead. I remember the last time you told us the net profit will jump up by more than 30%. In the first quarter itself, you have delivered a splendid performance, the top line growth of more than 25% odd. For the year, what kind of a run rate are you looking at? Do we work with 15-20% top line growth, margins as well as net profit, 30-35% growth on the cards?
I think this year we should expect about 20-25% revenue growth. We should cross 1,000 crores in revenue for the first time. EBITDA margins, we are expecting about 35%, and similarly PAT in line. So yes, an overall growth of 30% in the bottom line seems fair.
Okay.
Okay. And considering your capital expansion plans, if you could just update us on what's the current debt on your company's books?
As of now, we have no long-term debt, and we intend to keep it at that. We will be doing a capex of about 200 crores this year, mainly on account of the butyl phenol project. which will be on stream by April, but it will be mostly funded through internal accruals.
You know, Vinati, just a quick question before we let you go. I know your promoter holding is at around 74%. I think I remember a couple of years ago, you had bought some shares from the open market, if I'm not mistaken. Will you look to go to that 75%, given that your profitability is going to rise, your margins are going to go up, things are looking good? Will you consider that, taking it to 75%?
I mean, it is on the cards. We still have to discuss it. We haven't formalized it, but we would like to own maximum that we are allowed to in our company, because we as promoters get the best returns on our investment in our company itself.